So this new level strategy is simply probably one of the best swing trading strategies that you probably could ever come across, right? What makes it so good is that it's designed for traders that may not want to day trade. People that don't have a lot of time to sit in front of a computer every day. They may have other commitments with their time, like working a 9 to 5. While they're progressing, trying to get out of the 9 to 5, they may want to start trading. So a swing trading strategy, especially the one like New Level, is perfect for them, right? What separates a day trader from a swing trader is that day traders, they probably spend a lot more time in front of the charts. They're usually in and out of positions the same day. A lot of us don't have time to commit to that, right? So a swing trading strategy such as New Level works perfect for traders in those situations. What also makes a New Level strategy a really good strategy to trade is because it has a very high win rate, right? Because when trading the New Level strategy, we tend to go for a 1-to-1 risk to reward. You tend to have a higher win rate if the strategy is traded properly. Okay. Now let's go over the dynamics of this strategy. Let's look at all the components of the chart, and I can show you. I'm going to attempt to show you guys why the setups are very easy to see, which makes the strategy very simple to trade. All right. So the first thing I want you to take a look at, guys, is the support and resistance placed on the chart. Okay. Now, the support and resistance on the daily time frame, remember, no matter if you're using a support and resistance indicator, such as the one I use, the 0.0 support and resistance indicator, or if you're manually drawing in your support and resistance, keep in mind, you always want to draw in the support and resistance from the weekly time frame. So if you're trading on the daily chart, you want to draw in your support and resistance on the weekly chart and then drop back down to the daily time frame and just make minor adjustments with your support and resistance. Okay. Now, another additional component to my trading chart and trading New Level is I don't use the traditional Japanese candlesticks. I use what we call Heikin-Ashi candlesticks, right? Heikin-Ashi is simply an indicator that I overlay over my Japanese candlesticks, and then I switch from Japanese candlesticks to the bar candlesticks, to bars essentially. So let me show you how that's done. Once I go in and put in the Heikin-Ashi candles, lay that over my traditional candlesticks, it looks like this, right? Because I lay it over the Japanese candlesticks. But then I simply go in and switch from the Japanese candlesticks to the bar candles, and then it gives it a much smoother look, right? And then you can essentially choose whichever colors fits your charts better, the best. Optically, it looks good to you, and what makes it easier for you to see the reversals. So the other components that I use in the New Level strategy template would be my either 12 or 14 period moving average. This moving average shows me volatility in the market. Strictly for volatility, it moves really well with the candles, and you can tell as the candles change direction, the moving average does also. Another moving average that I use is a 36 period moving average. 36 period moving average acts as awesome support and resistance, or dynamic support and resistance on the chart when used with the New Level strategy. As you can see, price comes up to the 36 and it peels off. You know you have really good volatility in the market when price is only able to come up to the 12 or 14 period moving average and it peels right off, goes in the opposite direction while it bounces off the moving average. But what we're often looking for is a deep pullback to the 36 period moving average, right? Now, the last moving average that we use is the 200 period moving average. And I use the 200 period moving average strictly for trend direction. As you know, when price is trading above the 200 period moving averages, you're looking to go long. When price is trading below the 200 period moving average, you're looking to go short. Simple as that. Okay? So that is the support and resistance. Those are the moving averages, and this is the Heikin-Ashi candlesticks, right? Now, let's go down to the oscillators. So the first oscillator that I use is my FX overbought oversold indicator, right? Let me just make this a little bit bigger. Let me just expand that out a little bit. So I use it same as I would use a stochastic indicator, right? The settings on my FX overbought oversold indicator is 5, 3, and 2. Right? Same as I would use with my stochastic.
Here's the top search result.
Let me just shut that off. Now, I also use the level, the 80, the 50, and the 20 level on this oscillator. And the way you trade it with new level is once everything aligns, right, with price, then you come down and you check your oscillators. You want to make sure that price has just crossed above the below the 80% level if you're looking to go short, and price crosses just above the 20% level if you're looking to go long, right? For more of a confirmation of trend direction, you could wait until price cross above the 50% level if you're looking to go short, or same as if you're looking to go long, it would just cross the 50% level in the other direction of the trend. I can tell you guys, if you wait until price crosses the 50% level, you have a higher win rate, because once price crosses the 50% level, it shows that there's really good momentum in the market, and the price is more likely that the price will continue in the direction of the overall trend, which you should be trading in the direction of the overall trend. The other oscillator that I use strictly for confirmation is my Traders Dynamics Index, or better known as TDI. So I have removed most of the components of the TDI. I've taken off the volatility band. The volatility bands are gone. The market baseline is gone. I've gotten rid of the signal line. I really don't use that. And I have gotten rid of the levels that come with the TDI. And I just dropped horizontal lines to represent the 80, 50, and 20% line. I'm really only using the RSI line to just confirm what I'm seeing on my overbought, oversold indicator after I've taken a look at price. Okay. Now, here's the way you would trade this strategy. And again, you want to make sure you're trading in the direction of the dominant trend. So at this point, we would be looking for sell trades at this point, right? So the first signal that you would have gotten is this signal right here to go short, right? So, and actually the signal would have came, right here, right? So how you enter the trade, once you get this signal, you're going to go ahead and mark off your stop loss. So your stop loss would be at the swing high of the reversal move. So price was going up. Here is the swing high. Here's your potential signal. You will go ahead and mark off your stop loss, right? Now, the next thing to do is search for an entry in the price, entry into this trade. So you would go down to the 4 hour time frame, right? Once you go down to the 4 hour time frame, we have our stop loss, because this is the trade right here. You have your stop loss, right? And let me back up a little bit. If this right here is the day that gave you the signal, then this right here is your trading day. Because we don't take signals to the day closes. So this is the day that you're trading right here. This is going to be a very tight trade, but let's see if we make it. So let's go back to the 4 hour time frame. So you will go in right here. This is the end of the week. So the market essentially will close, but you will wait for this pullback right here. This will be your next pullback. You will go short right here. You would have 187 pips stop, looking for 187 pips down. So you see on this particular trade, this would have ended up being a loss for us. We didn't make it with this trade. Okay. Now keep in mind, this is a 70 to 80% win rate. So you got to factor in, you're going to lose 30 to 20% of your trades. Like with every trading strategy, nothing is 100%, right? But because of our using proper risk management and being willing to take a loss when a loss presents itself, we live to trade another day. So here would be your second signal. Here's your second signal right here. So you will go ahead and mark in your stop. That's my stop right there, right? I will go back to the 4 hour time frame. Look for my entry into the trade. So here we go. So my stop is already set right here. I would just drop it down a little bit, tighten up on my stop loss. Since this is the signal, man, I keep forgetting to do this. Since this is the day that we got the signal, this right here is your trading day, the next day, right? So once once the next day has started, we're looking for a pullback. We're looking for a pullback. So here's where you receive the pullback, right? And then you see again, price is looking like it's going to cross over the 50% line. So once you get this move right here where price closes below the 50% line, that is your clear to take the trade, right? So you would take the trade. You always want to take your trades either at the close of the candle, or you'll pull it back a little bit in the middle of the candle to look for an entry, like a pullback entry. And then our stop loss on this particular trade would have been 176 pips. So we're looking for 176 pips down the other way. And as you guys can see, we clearly made that. It took us maybe 2 days to make that, but we made it 176 pips easy. Okay. We essentially had really no drawdown in this trade. There was no drawdown, right? 176 pips. So we're one out of 2 trades. We're 1 and 1. So let's look for the second trade entry, right? So here's your next trade that you got. Boom. You see price starts to pull back on the daily. Then it shows you a change in momentum with the first red candle here. Once you get that candle, all your alerts are up. Your alerts are up. There's a potential trade entry taking place. You want to make sure that you're trading in the dominant direction of the trend, which is down, taking short trades. You got your price is telling you, hey, I want to reverse. I want to move back down, right? So you get this red candle. Then you want to drop down to your oscillators. You want to read what your oscillators are saying. The oscillators are saying, yes, price has crossed below the 80% level. I think I want to go the other way. You read this, you confirm that with your RSI on the TDI indicator is going the same way. So here's what you do. You place your stop loss there. Now you drop to the 4 hour, since this gave you this is the price that closed, that gave you this gave you the signal. So this is essentially your next trading day right here. This is where you start trading. So you go to your 4 hour. You're looking right now. So once you go down, drop to the 4 hour time frame, you're looking for an entry. You're looking for a pullback. So you're waiting. Boom, that gives you the pullback. That gives you the pullback highlighted by the momentum oscillator. So bam, gets you in right here. Now, since there's a level right here of support, you really don't want to enter this trade until it breaks this level. So here's essentially would be my entry when it breaks that level of support, right? So here, that's your entry. Here's your stop. 2% risk on 247 pips. 2% risk is what I trade. Straight to the take profit. Again, you got a little drawdown right here. But the following week, when the price opened up again, it went straight to your take profit. Straight to your take profit. Now, you have to understand when you're trading the new level strategy that you're going to lose 20, 25, 30% of the trades. But you're going to win up to 70, 80% of your trade. I would say this trading strategy averages about 76 to 78% win rate, right? Because you're taking signals on a daily time frame, which simply means that if I take the proper signal on a daily time frame, that shows me momentum has shifted and price has been going in this particular direction for the entire day. So I would think that the next day when price opens up, it would continue in that direction. That's simply what makes the win rate so high, right? Not to mention that you're taking signals from the daily time frame, which shows you a better, which gives you a better idea of which way the market wants to trade, right? Now, let me highlight a few things when you're trading this new level strategy. Here's what you don't do. And I had to learn this lesson the hard way. There is a way to trade this, but if you're strictly trading new level, here's what you don't do. Here's what you never really want to do. Because if you do, you're going to realize you're losing more trades than you have to. When you're trading this strategy, guys, you only want to trade the outer fringes of the strategy. Now, you can trade in either direction. You can trade in either direction. You can be a counter trend trader. If you like, you're gonna probably lower the win rate a little bit because counter trends, you never know when they're gonna turn around. So you can be a counter trend trader. So you trade in either direction. But here's what you don't want to do. You don't want to trade this middle part. You want to trade the outer fringes. You want to trade the reversals in the market. Now, I know a lot of people say trading reversals is a losing man strategy. Well, I have a trading account that proves that different. Right? I have a win rate that proves it different. And the thing about new level is hindsight is 2020, but we don't. But while I'm making these videos and I'm teaching you guys how to trade this strategy, this is not 2020 strategist. This is not a 2020 vision way I'm teaching this strategy. I am showing you how you can clearly see trend direction. We know that Heikin candles, they don't repaint at all. They do not repaint at all. These are, if the candle closes bearish, it's going to close bearish. If it closes bullish, it's going to close bullish. These are momentum-based, trend-following candles. So when the trend changes, it gives you a different color candle, right? And you can tell if you're trading in the proper direction of the trend. So here we would be looking for buys. Price came down. Red, and it gave you this first signal right here, right? To change blue. So what you want to do after that, you want to go to your oscillators. You want to make sure you're getting a price change above the 20% level, and it confirms it right there. So then you would just come in, you would place an order either in the middle of the candle or the close of the candle, right? So you would go ahead and place your stop at the swing low. Here's a day that gave you the signal. That's your signal day. So essentially, here is your day of trading, because we take the signal after the close of the day. So this is when your trading day starts, right here. You drop to the 4-hour time frame. My computer's moving a little slow. I'm sorry, guys. My internet acts up sometimes. So you drop to the 4-hour time frame, and I'm looking for this signal. Here it is, right here. Gave you the signal right here. This is the day that it starts. You have your stop loss set. So let's say if we enter right here, stop loss at 120, what is that? 126 pips on the stop. I'm looking for 126 pips straight up. Well, we hit it right here. We hit it like around here on this candle right here. So it took us a couple days to hit the take profit, but we did hit it. We hit it, right? And here's how you see these setups even before they start. Here's how you see the setup. I go over it again with you. You want to make sure you're trading in the direction of the dominant trend. The dominant trend is represented by the 200 period moving average, right? If you're trading below the 200 period, if price is below the 200 period moving average, you're looking for shorts. If price starts to trade above the 200 period moving average and is getting ready to bounce off, you're looking for long trades. That is it. That's bottom line. Take the guesswork out of it. Your trading strategy should be very mechanical, which means if I see this, I do this. If I don't see what I'm looking to see, I go to another chart. Bottom line, right? So your trading is very mechanical. This is how you see price. Price goes up. Price is trading below the 200 period moving average, right? Price goes up. There you get a direction change in trend. And now I'm trading momentum. I'm looking at momentum right here. Momentum is telling me price wants to go down. Why is momentum so important? Why is momentum so important in the currency market? Tell you why, guys. Because momentum moves before price. That's why divergence is so important. Momentum moves before price does. If you push someone down before they hit the ground, don't they have to flow in that direction? That's called momentum. Momentum moves before price. So I look at the momentum in the market, which tells me which way price wants to move, bottom line. And now I'm just looking for a change of the signal right here to be the change of candle color, which tells me, then I mirror it up with this. I go in and pop in my potential stop loss, right here. And then I use a 1-to-1 take profit. Trade takes care of itself. I use 1-to-1 because I sleep better. 2%. I know I'm looking to make 2% on every trade. If I think the trade can give me more, so let's say if I took this trade right here, and let's see, 356 pip stop at 2%, and I know I want to try to get to this level, so that's like 409 pips, right? Here's what I would do. I would just simply open 2 positions. Each position would be worth 1%, right? Instead of the traditional 2% of one position, I would open 2 positions, would be 1% of my stop, 1% of my account. right? So essentially I'm trading the same 2%, but just two 1% positions. So the first 1% position would be 374 pips, whatever that is. And then the second position would be the remaining until I get to this level, would be 400. So I would take profit at 374. And on the second position, I would take it at 400. I'm not risking any more in my account, but I'm looking to try to get the most out of the move, right? So guys, that's just me going over the new level strategy with you. I hope this is a strategy. It's a very, very good strategy with a really high win rate. I hope I explained it well enough for you guys to understand it. If you have any questions, comments, please, leave a comment in the description. If you got something out of this video, please like the video, share the video. And if you haven't already, please subscribe to the page. I'm going to be breaking down this new level strategy in a lot more detail, because you can take this swing trading strategy. You can trade a momentum based strategy from this. I'm going to show you that in the next video. Or you can even turn a new level strategy into a day trading strategy. I'm going to show you how to do that in videos to come. So like I said, if you like what you've heard so far, please like, share, and subscribe to the page. Forex King.